All right. I think we are live.
Hey everyone, good morning.
If you can hear us and see us all at the same time, you could just give us a chat in the side box over here and let us know.
Yes.
Right on.
Can you see, and you can see us? Okay, good. That's great. Hey, good morning, everyone. Thanks for spending some time with us. We're really looking forward to having a conversation with you. Robert and I are entrepreneurial veterans. We've got over 10 startups between us, and we've seen a lot of different things over the years. As an early stage investor, we know that there are a lot of challenges out there right now. And we sort of envision this to be part car talk, part between two ferns, to be pretty related around this information. I know that there's a lot of technical webinars going on right now, but we wanted to basically provide actionable information to our community and help support everyone that is trying to make a go of this right now. Robert?
Yeah, for sure, right? The goal is not to add to the noise. It's hopefully try to cut through it a little bit and know that these are definitely interesting times. And as Julie and I were sort of talking about beyond sort of what we do on a daily basis, what we can do to reach out to the community and be part of it, we thought these would be a good idea. So that's for you all to judge. We set these up to run for the next 6 weeks or so. If they go well, we'll continue to do them. If they don't, it won't hurt our feelings. And so out of the gate, just from the disclaimer department, this is not tax advice. This is not legal advice. This is not solicitation of any kind. This is designed to engage with our community, talk a little bit about what we're doing, if that's of interest to folks, but less talk from our end and more responding to questions that you all may have. So to do that, we certainly have a cool chat box over here on the side, as well as down the bottom here, you'll see there's a button to ask a question. If you've got a specific question, no matter what it is, we'll do our best to answer it. If we don't know the answer, we will tell you. Or if it's something that is not best to be answered on this, we can let you know that as well and follow up separately. So that's kind of the kickoff. Julie, as you and I were kind of talking about this and kind of how we're sort of looking at the world, I thought you had a good perspective kind of in the long arc of this, of maybe not having gone through something as strange as this in our lifetimes, but parallels back to times when things looked bleak and things looked bleak and what you did or how you sort of saw your way through that. I thought that would be a good way to sort of kick things off here.
Yeah, so thanks, Robert. So I think one of the things that's really occurred to me during this cycle is, it's human. It's the way the human brain works when things are going up, to think that they're going to be going up and getting better the whole time, and when they're going down, that they're just going to get worse forever. And I think that this time is as much about leadership and authenticity as it is about getting stuff done. So one of the recollections that I had from this was when 9/11 happened, and I was sitting in my home office watching the planes hit the Twin Towers over and over and over again and thinking, I'm going to lose my house, I'm going to lose my business, how am I going to support my family, all of those things. And, it's also human nature to be ingenious and to be innovative. And I think that part of, if you're a founder and you're leading an organization, or if you're an individual trying to make sure that your life is intact, say you have people in your company that are friends and family, or you're working with your spouse, and also just the dedication to team, it's really important, I think, as a person who's taking responsibility, to make sure that we get the help that we each need to sustain through a down cycle like this. This is unusual in that, it's a virus, it's systemic, it's not like one industry failed. So we've got a different set of circumstances here. But I'm optimistic about how innovative people are. And, we get the chance as fund managers to work with some of the most innovative, interesting entrepreneurs on the planet, I think, in Oregon and the Pacific Northwest.
Yeah, super good point. And again, lots of folks talking about what's going on or prognosticating about how it's going to come together, and as I was reading about the shift from, retail purchasing to e-commerce purchasing, right, which has kind of been trending anyway. It's sort of like in the last 3 or 4 weeks here, 5 weeks, or however long we've been doing this, like digital transformation has actually happened. So it accelerated beyond, paying big consulting firms lots of money to write white papers about how businesses and relationships would move, forward in a digital world to like out of necessity. And I think out of that, certainly creates some pain for the way that things used to be done or where we depended on them to be done. But creates amazing opportunities around how you interact with customers, how businesses interact with each other. And again, there's sort of been the foundation of this in place for a while, but it hasn't had this sort of catalytic event to force it. So if there's some glass half full out of this, right, that the things that maybe that we've been talking about digital transformation and how that's going to benefit us all, right, maybe accelerated through this thing.
Yeah, so there's a few questions on the board, which is great. So any creative ideas to keep teams engaged while remote and show gratitude for their contribution? So I have one thought on this, and then maybe you've got something else. But so we want to do a little bit of this through storytelling. So one of the things one of our founders is doing is he's got, of course, a distributed team. I think he's got like 9-10 people. And he's been calling each of them on Friday afternoons just to check in, make sure they're okay, their families are okay, they have what they need to, be productive. He updates them on developments in terms of what's happening, and so that nobody is in the dark. And I think that kind of transparency is super helpful, because when there's a gap in information, people go up a negative ladder of inference. They go up a ladder of inference, and it's always negative. So the fact that he's taking that time, I think, is a super helpful way to create cohesion in a team.
Yeah, it's interesting. So if you've worked remotely before, if you've worked from home, right, you just sort of pick this up and run in stride. But if your whole frame of reference around work and your positive sort of feedback based on work is in an office environment, or is based on the daily stand-up or the status reports you pull out or whatever, I think this is a different thing. And so people just need to know that they are engaged and motivated. And I think that's a super tactical thing, which I've done in the past with remote teams, is you just come up with a weekly punch list, right? I mean, there's sort of the overall objectives that you're trying to do, and what you're trying to march to for the quarter, and the whatever it is. But it's like, hey, here's the tactical things. Like, it's almost like a checklist, and that doesn't have to be in a super fancy collaboration system, right? Light up a Google Doc or whatever it is and just list out the priorities for the week. And it becomes a rolling log, essentially, of what everybody's working on. So that's not the human motivation. That's more around just sort of keeping people engaged, especially those that maybe haven't worked remotely before or in a distributed way. So I think that's important. I think the other is, I think that gratitude and saying thank you is an important thing, right? Especially during this time, because people are scared. They don't know what's going on with the economy. They don't know what's going on with a lot of different things. And I think recognition of that is super important. And also letting people know that if, like, you're doing one of these and your dog decides to bark in the background, right, or your child sort of, pops their head up into it. I mean, this is just us being human. And it doesn't mean that that you're not focused and serious about what you're doing, right? It's just that this is the day and age you live in. And I think back to kind of how this maybe helps, us digitize a little bit in terms of behaviors, is that the recognition that we do have this sort of harmony that it can exist between work and home, and that those are two very interdependent and important things.
So how about, how has the current situation changed your approach and process to reviewing and evaluating investment opportunities? Anything we as startups, sorry, a new question came in and it bumped it. Anything?
It's our first time on Crowdcast. You can vote on how we're doing as well. So.
Also, and this is oversharing, but this looks like coffee, but one of my well-being things that I'm doing during this is I'm drinking cucumber juice in the morning. So I hid it from you because it's green.
Thank you for that. This is actually coffee, so or
So how has the current situation changed your approach and process to reviewing and evaluating investment opportunities? Anything we as startups looking for investment should do differently? And that's from Scott Brown.
Yeah, so I guess there's a lot of layers to that answer. We're continuing to do what we do, which is to talk to companies and look at investments, and our plan is to continue to make investments. We haven't stopped. We have sort of a funnel of things that filter quality opportunity or qualified opportunities for us, right? So our first is kind of a geographic filter. So we are an Oregon first, Pacific Northwest interested investment fund, right? So we are interested if you are a company from elsewhere and you have employees in Oregon, right? But we need some connectivity that goes in there. So that's kind of our first filter. And then we begin to look at kind of industries. So technology, software is certainly something we invest pretty heavily in, but we're also interested in consumer products with a heavy emphasis on direct-to-consumer models. So we like those two areas. And then as we go further down in the filter, it's about the stage of the business. And we sort of boil this down to the goal to sort of get through the mystery of what it takes to move forward with us into three key questions, right? Or three boxes that need to be checked. One is, can you build the thing you think you can build? So you've moved this beyond concept and aspiration, and you actually have built something. We think that's an important step to sort of begin to get the realization on the business. The second is, does anybody care? Which means you've moved this beyond your friends and your family and the people that won't hurt your feelings because they want to support you. And you've gone out organically and put this in the hands of folks that said, yes, this solves my problem, or you've got usage data or trials or pilots or something like that. The third box is, does anybody care enough to pay? This is basically just trying to sort of vet and validate that the business is pay worthy, let's say. We are generally not a pre-revenue investor, although sometimes the usage data can give us a good indication of that. So that stays the same. I think that the step back on it is, the macro environment certainly is an impact on this. But even to the point on digital transformation, we on our website, we list kind of our 4 key investment themes. And even in the last couple of weeks here, we've changed what was around cloud-based businesses, right, which is just about anything at this stage, and actually articulated around digital transformation and companies driving that, right, for either based on customer interactions or business interactions. So a lot of words in that. That was not the goal, was to sort of hear myself talk here. But yeah, that's our posture. And so we are definitely very focused on that. We've never been a big investor in things that are like, things that require FDA approval and large capital outlays over a long period of time. It's not really the zone that we understand. So not something we're surfing into. Jill, I don't know if you got additional thoughts on that.
I think the thing is, so we built a fund. These last couple of years, we raised a fund, and we are actively looking at investments right now. So, in fact, we made an investment just yesterday in a consumer products company. So, and part of that was, really we always look at the team. I think in this kind of environment, team persistence and grit is going to be an important thing, because we see right now there's a sort of a survival phase, and Robert has articulated this really well, but a survival phase, and then there's a sustain phase, and then there'll be a growth phase. And what we don't know, because we don't have a crystal ball, is how long each of those phases are going to take. So, those things become really important to us. So we're proceeding at a very deliberate pace. We haven't slowed down, but just to give you an idea of how our deal flow works, and when we're looking at opportunities, we see several hundred companies a year. We have conversations with somewhere between 150 to 200 companies a year, and we're doing around 7-ish investments every year. So there's a lot of competition, but what we have tried to do is democratize the application process, because in venture and investing generally, it's like you have to know a guy who knows a guy who knows a guy. And what we've done is we have these open application periods, which we plan to open one up sometime in the next few weeks here, so that anybody that wants to apply that meets our criterion can do it. And if you apply and you meet the criterion, then you get a call. And so part of that is us talking to companies in terms of venture development provide just some input and insight to companies around what they might do to be investable, and the other is to actually find opportunities that fit our requirements.
Yeah, for sure. Yeah, the application period, we're sort of working on the dates on that, but as that comes together, we'll certainly blast that out to the same crew that we shared doing this type of thing with. I will say that kind of back to what we look for, and I think what's super important and what I am constantly in awe of as we get the privilege to interact with entrepreneurs is this balance or this sort of blend between tenacity and humility. We get the privilege of working with a lot of really awesome people, and the people that we bond the best with as we go through this process demonstrate that. And I think current situation is case in point for that. Doing a startup is great and everybody's excited and whatever. Man, it's friggin' hard, right? It's hard and it's emotionally draining. Those of you that know me have heard this before. I'm a little bit of a broken record, right? So I've had 6 startups throughout a 20 some odd year career, right? 2 of those were failures, including one during the dot-com era where we were awesome at about nothing other than raising money. And then that stopped. I would say two exits that were press release exits. So if you don't know what that is, that means you basically get something across the line. Somebody finds some value in the company that's maybe an asset sale. Generally, nobody makes any money, but everybody high fives and there's a press release, right? And 2 are somewhat meaningful, right? But the arc of that is instructive in that, as Julie sort of started out with, which is, man, it can be really hard, especially if you're a founder or CEO and you build a team and then you've got to make decisions on how you minimize your burn rate, right? We've just come through that, right? And the 70% or plus of your burn rate is based on payroll and based on people, right? And we're all humans and we're not necessarily, trying to create hardship, but it's this tension between business and what you need to do for the business and the humanity of all of this. We were fortunate to be on a thing with Rain invited us, and I remembered this from time past that I think this is the time to manage your business with a spreadsheet, not PowerPoint. Right? PowerPoint's great. You can sort of aspirationally, and you can sort of do bullet points and how awesome everything is, and here's our plan. Generally, spreadsheets don't lie to you. At least you need to know what your variables are that you're assuming in there. And this is the time to manage your business through a spreadsheet. And that can tell you some hard truths sometimes. And I think that's the true sort of grit and determination that, if you want to be an entrepreneur or you are an entrepreneur, you have experienced. And if this is your first time going through startups or starting a business, you will experience that.
Examples of early stage companies that are successfully pivoting during this time that others can learn from. So this isn't actually a full pivot, but I thought that this was really creative. So we have a portfolio company that has some excess inventory, and it was kind of a lot of odds and ends and things that weren't packaged, and some of them were not, they didn't have flaws, but they had inconsistencies in their structure, let's say. And so they, and apparently this inventory was not known to them. One of their distributors had it someplace, and so what they did was they created mystery boxes, and they put them out on their social channels, and they sold out in like a few minutes. And part of what they did there was they engaged kind of their close-in social network, and they basically then got rid of some excess inventory, and they created fans for life, and had some cash come in that they would not have otherwise had that bump in cash because of the selling off of the inventory. So, when there's lots of money around, people feel like they're really, really smart. And when things get down in, to the nitty gritty on some of this stuff, you got to really, I think Cuomo said this in one of his press conferences, you have to think outside the box because there actually is no box. That's where drawing on your team, your advisors, the people that love you no matter what, your clients, and asking for help in terms of really how do I think about this differently, because there's a finite number of business knobs and dials that you can tune in terms of the cash, but then there's saving money and there's making money, right? So what do you do in each of those categories to make it work?
Yeah, this isn't a good question on the pivot thing. This isn't a precise example, but I think it's another one of those a little bit directional, which is it's quite possible that the reason that your customer bought from you before this is not why they find value in you now, right? Or your sort of target customer may find different value in you now than they saw previously. So you were solving some problem. We've seen this in one of the companies in the portfolio that we've just invested in, that like the real sort of value prop is the fact that this is a cloud-based piece of software that a now distributed workforce can access. And so, I mean, that doesn't seem really like sexy and awesome, and you're like, what, right? But that becomes the problem because an office-focused culture where it had, proprietary systems or focused systems or whatever it was, now all of a sudden has people, out of their homes or wherever it is working on laptops and needs all of the things that are required for secure, access and all the data controls and all the things that go on for software, but on a cloud-based architecture. So you're this is a tough time for sort of customer development if you're early on, which is, getting out and sort of trying to validate need and trying to get the product market fit. It's a pretty good time for product development. I think we emerge out of this at some point in time, but those conversations and the new reality that companies are experiencing, I look at this through kind of the B2B software lens, is now I've got all my workers that are not in my building. They're accessing from not necessarily a standard device network, right? I got people on Macs, and I got people on Dells, and I got people on dial-up, and I got people on high speed. I mean, there's all this variability that's now entering the IT world. I think a ton of opportunity gets created in there. So there's interesting times to kind of talk about those kind of problems with people. I mean, again, it lives there a little more on technology.
There's a question from Mark Alexander. How do you view the balance of investment interest in startups who have strategics in hand / with contracts? Do we need elaboration on that? Maybe Mark, can you elaborate?
Yeah. Is that a investor, or is that or is that some like a customer, like you're working with a customer to solve a problem? We can a little more detail on that one. Great. So I like the fact in the questions here, this is just an intro point. You can upvote the questions that are most of interest to you, so that's kind of cool. So the current situation went around our process and reviewing companies continues to be a popular one here. Thoughts on balancing focus and opportunity at early stage post revenue? Yeah, I think again that's kind of back to you've got current customers. Make sure those customers are happy. If they have the ability to continue to buy from you or buy from you in a different way, or pre-buy, or lock them in for a longer. Try to explore a little bit.
You just turned into the logo for a minute. You just turned into the Cascade Seed Fund logo, and now you're back. Okay.
Awesome. So this is all part of the new distributed workforce, right?
If you have,
maybe my kids are now.
I don't know if I should.
Right. So
I was on a call, and I was listening, and a woman was talking about her company, and she said something, and then right then my dog zipped by and was barking, and I said, "No!" And she thought I was referring to her. So I've had my share of the problems on the Zoom. Okay, sure. If you have technical partners who are investing money and in-kind investment in product development as strategic interest in our startup, so I think maybe this is, and Mark, correct me if I'm wrong, but this is with regard to if there isn't revenue, but they have technical partners who are investing money and in-kind investment in product development. Is that a company that would be of interest to us? Let me know if I didn't quite. Oh, I got a yes. So there's not revenue per se, but there is incoming value from partners.
I think so. I think that there's a lot of levels to this as well, right? Which is, and this is, those of you that have heard this before, I'm sorry, right? This is, when we look at opportunities to invest in, this is never a question of is there a business? Business exists if you can sell it for more than it costs you to make it, you make profit, right? Everything goes well. This is kind of the investment case, and the investment case has a lot of layers, right? And we're not a giant fund. The current Cascade fund is about a $6 million fund. But we do have, we pool investors, and we have a certain return threshold that we have to model out. So that's all the investment case, which is this something that can be built in a relatively rapid time period that someone will find some interest in to purchase, which is, generally the scenario rather than a public offering. And so what can happen with a strategic is if you get sort of NRE funding, non-recoverable engineering, I think that's what that acronym means. I guess I should know that. It comes down to who owns the intellectual property. So if you think about, right, you're going to build this and you've got this close strategic relationship. If it gets down to a point in time where not that company, but another one is interested in acquiring you, and they can't buy the intellectual property because there's a gray area or it hasn't been papered correctly between those two, that can be complicated, not only from an acquirer standpoint, but from a funding standpoint, right? If you get into a situation where there's a question of who owns the sort of intellectual property or that asset, that's a big deal. So as we go through diligence, we are always looking for the intellectual property assignments to make sure that you didn't hire a contractor, 2 years ago that built some, login screen that may have a claim, especially if the company does extremely well. So those are all the nuances that seem like ridiculous to spend money on. Have a good lawyer that understands how all this stuff works, get all this stuff papered out of the gate. So those are all mechanically how to do this. I think the question on whether that is something we would look at is the first part of my answer, right? Which is it would depend on who owns that and who owns that in the future. Because you may have a great business, it's going to be super successful and do super well for everybody else, but it may not fit the profile of an investment fund.
So that's a great answer. Here's one around making money as a startup. So with companies putting a hold on spend, can you share any creative ways startups are finding their first paying customers? I would say some are doing pilots. So just to gain the trust and use and whatever the product is. Some are doing discounts. Some are doing try now and pay later. I'm trying to think if there are other things that we've seen.
Yeah, this is anecdotal more than in a data-driven answer. But across the companies that we work with, it seems that there's more upper funnel activity, meaning that more early stage conversations or people that would normally ignore your inbound call or your email to try to get them on the phone are more inclined to do so. And maybe that's because we're distributed now. Maybe that's because we're craving human interaction. I don't know. So it's possible to have more, stack the funnel earlier on, more qualified opportunities, assuming you know who you're trying to sell to, right? Your ideal customer profile, who within that company you need to talk to, your target personas. And they could use this time to kind of build that out a little bit. You may still get into budget constraints or budget cycles or pullbacks. And I think that's where it's about probing, right? It's like, what is, if it's not this sort of core sort of functionality that I have that you're interested in right now, like what is your biggest problem, right? Or what report, I always go back to this, like what report is it that someone spends a week generating, right? Or a day a week generating for somebody for some meeting? And how is that now even harder because everybody's distributed? If you can go in and begin to solve that, that may give you a little more of a foothold. And again, it's back to kind of the adjacency opportunity as opposed to maybe what you thought was the key thing that would drive somebody to buy now. So like I said, you're probably going to have a lot of good traction, I would think, right, with people that would have time to talk. They may not be necessarily in a position to buy from you. But during that course of that conversation, you may find a compelling reason to buy now. And that may help, right? That's not a real actionable answer, but that's kind of how I'd approach that.
What does age mean to you in a startup context? And I don't know if this is age of startup or age of founder, but I think with regard to age of founder or team, it's it's kind of a moot point. Whether a person has years of experience or not very many, what we do like to see founders that have some experience, but if they don't, like if they haven't founded a company before and they have good advisors or they have some senior folks on their team, then that helps to balance that out. So we have kind of a cross section, I would say, Robert, when you in our portfolio of folks that have been multi-time founders and then our first-time founders.
Yeah, for sure. Yeah, we're again, it's sort of back to the criteria we talked about, and what as we get to know folks, what interests us a lot. I think that the thing, it's not so much an age thing as maybe it is an exposure or experience or something like that. I think it's always important to kind of have sort of knowledge of the problem you're solving, which I know sounds silly, but it's like, look, of the whole things that I could work on, right? Something that I've actually experienced in some way, shape, or form gives me a little more frame of reference, as opposed to, I just did a market scan and I think there's a white space in this area and I'm going to go build a company in something I have no background or experience in. You can augment with your founding team around that, right? If you have a particular technical aptitude, or and then somebody comes in that has maybe some a little more of the domain thing. But yeah, I don't think so. I think I don't have it up in front of me, but there's lots of stats out there that talk about the average age of an entrepreneur, and it's not all 22-year-olds, right? It's a lot of 40 plus, where you've got some experience and some wisdom. And I think it also, think about the current situation we're in. I was talking to one of the founders we get to work with, and he's been through the 2008 financial crisis, right? He's got some frame of reference on what the .com era was all about, right? That's way back in the early 2000s, for those of you that don't know. And that's back to Julie's initial point on this, right? Those were bleak times, right? That was like the .com thing, like everybody I knew was out of work, right? Technology people, lawyers, bankers, like everybody, because I was very much in the tech sector. And it didn't matter that you were a good person or a bad person, or that you had good skills or bad skills. I mean, everybody was out of work. I think so. Those frames of reference are super important, because doing this is hard, right? Starting a company is hard, and you're going to have constant challenges. It's the journey versus the destination thing. You're going to get sort of through the first phase, which is, will anybody buy my product, right? Will anybody care about what I'm doing? Will anybody believe in me to invest in me? And then all of a sudden now you've raised some money. Well, that's not the end of this. That's when all of a sudden now you're like, okay, now you have to do something with this, because you set a set of expectations, or you go and you land that massive customer. They're not going to care that you're a small company, right? They bought because you're going to solve their problem, and it's an all hands on deck type of thing. So I don't know. That ended up to a long, winding answer. Sorry.
Yeah, there's a question about what do we think about the PPP, and have any of our portfolio companies gotten it? I go back to something I said on a panel yesterday, which is, this is a case where having a strong team, and this is kind of a fundamental thing with a startup, is having a strong extended team in terms of your banker, your attorney, your CPA or CFO, and advisors, because some have applied and received, some have applied and not received, some decided not to, and it really is so individual to your business and your cash position, and what you think about this. So having those strong partners, number one, gives you information so you can make a good decision. And this is why they say leadership is a lonely place, because nobody can tell you really which way to go on this. But if you have a good team of advisors, and they can help you navigate it, because the guidance is changing, seems like daily. So it's a tough situation. They did, the stimulus did happen much earlier this time than it did in 2008, 2009. And so there is money flowing. I'm not sure I would say flowing, but it's showing up, let's say. So those are some thoughts about that.
Yeah, no, I mean, I know it has been frustrating, right? Even as we were trying to get clarity to it of what do you do, how do you do it, all these different things. But if you think about the amount of money that moved in a short amount of time through a program that didn't exist ahead of time, I think that's a lot of really positive there. So the answer is yes. We have companies that we work with that have gotten PPP loans. Don't have a real guideline in terms of whatever. I think that you start with your bank, picked up that, like QuickBooks and some of these other things that actually have the financial information that is needed. Like, this is the other thing, which is like, make sure that you are being very clear and accurate in the information that you're providing to qualify for these types of things. And I think the other is you've even seen a little bit of it that, these are publicly listed, if you will, right? And so just like a lot of things when you run a business, make sure it survives a newspaper test. Whereas if the fact that your company got a PPP loan shows up on the front page of your local publication, that's something you're comfortable with. And I think you saw some initial blowback on this of, Big Co, whoever got a $5 billion or $5 million loan, and why do they need that? And so I think that's part of the initial blowback. But I would just have that as guidance as you go through this, which is absolutely, if you meet the criteria and you have the ability to do that, I think that's exactly what it's set up for. And we are seeing companies getting that. It's not millions and millions of dollars, but it's doing what it's designed to do, which is to make sure that you don't have to lay people off, and you can pay your rent, and you can do some of these other things. But also, calibrate that against the what it's there for, but also keep in mind, I assume it's public at some point in time, but there will be not one, but probably many enterprising journalists that'll go out and put together a list of the companies that have gotten this money. So, just look transparently.
And there's a question from Jelani Memory, thoughts on balancing focus and opportunity at early stage post-revenue. So that's an interesting one, right? So you're just post-revenue. You have a lot of different kinds of things you could do, a lot of paths you could go down. So how do you stay focused? And I can tell you, there are a million ways to do this, and there are a million ways to do this poorly. Because as entrepreneurs, I think we're all opportunity focused people. But I can tell you a tool that I've used over the years, and I do this all the time, and that is, I say, if I was writing down a list of what was accomplished in the company at the end of the year, where would we be financially? Where, what would have happened? So I think about how to describe that in great detail. And then I say, what would I need to do every quarter to do that? And then I back up and say, what do I need to do every month to do that? And then what do I need to do every week to do that? And I do this, with Cascade Seed Fund. And then it changes, right? Things change and adjust, but I know the top 3 things I'm going to do this week, or the top 5 things I'm going to do this week to march towards, in our case, we aren't marching towards revenue, but we're marching towards certain investment targets or things like that. So, I know a little bit about your product, Jelani, and I think it's a really interesting question, because there are lots of directions that you can go. But if you have a detailed sense of where you want to end up, even if that adjusts, you have a much better chance of being able to execute against that. And so, kind of looking at every lane of your business and saying, what do you want to accomplish in each of those lanes? Then you can kind of reverse engineer out what actions you need to take to make that happen. I'm sure Robert has some wisdom on this.
I do. I was reading questions. So no, I will, and we'll brag on you a little bit here, Jelani. So Kids Book About is Jelani's company. We are very fortunate to be able to work with him, and I think that as a case study in this all began. So Kids Book About is an awesome sort of platform, my words, right, to help children understand complex issues. And so all of a sudden, this COVID-19 thing comes about. Jelani, I thought you and team did an awesome job of not only getting a publication out around that, because it was the right thing to do. I've got 2 children sucking at trying to explain what this was, what was going on, right? I think that's an important service to perform. you did the right thing by making it available at no cost, right? I thought that was really good. So there's the side of that, which is that helps because everyone was trying to struggle with it, but also that was a nice way to get a lot of inbound interest into your brand, right? About your product. So I think those were the right things to do. So back to kind of like, okay, what next, or what do you do, or how do you prioritize those things? I think a lot of what Julie was talking about in terms of overall prioritization is an important thing. The topics and the themes, and I think that we will get on the other side of this. Things may be a little bit different, right? And so what are the core considerations around that may be the types of things that parents are going to continue to struggle, with their children. I mean, mine are deprived because they can't hang out with their friends, and FaceTime just doesn't do it, right? For an 11-year-old girl, right, that wants to hang out with her bud and kick the soccer ball around. So I don't know. Thanks for the question, and thanks for coming, by the way.
Our customers' industry has been hit very hard by COVID. What are other B2B companies doing to protect/retain revenue? And then there's a second question, kind of a bit related. Any thoughts around bootstrapping? You want to take that, Robert?
Yeah, sure. No, and Ken, thank you for that question. That's what I was reading as Julie was talking. I guess there's no silver bullet here. I think what we've advised or have sort of think works in the past, right, is like if someone's going to cancel, right, don't let them cancel. Just have them pause, right? And there's, I know that's a subtle difference. You're still not going to generate revenue, but it's hey, we understand this is a tough time. We understand, that this may not be, a top priority for you. You don't have the budget for this right now, but let's not deactivate the account. Let's not, cancel the customer relationship. Let's just put this on pause and revisit this thing, maybe at the beginning of Q3, right? So buy yourself a little time, show sort of some awareness that this is a tough time for everyone. Kind of beyond that, I think it's also back to like what are the new problems that they have. If the problem is that that the whole reason they have your software is not needed because transaction volume has gone to zero, it's a different thing to solve for. But if there's a way, especially as we think about emerging from this, that you can be helpful for, that may be adjacent a little bit to what they're doing in terms of restart, right? And then if you can kind of become sort of a trusted partner in that process. And then if the product platform has something around that, right? And it may be as simple as, hey, what you're gonna have to do is you're gonna have to do a re-engagement campaign. So let's find everybody that was a customer over the past 24 months and, let's get them back in the mix here. Let's try to ease them back in and sort of, kind of putting yourself in the seat with your customer could be helpful. I don't know, happy to catch up one-on-one about that as well, to brainstorm further.
Yeah, so on the bootstrapping question, I'm a fan of bootstrapping. I think it depends on your strategy, right? And so when you take on venture money or investment money or angel, like an individual angel or a fund like ours, small fund like ours, you're basically taking on a partner for the life of your business. And so it has become kind of sexy, to raise money and say, I have investors and all of that, but it completely changes the financial landscape in both good and challenging ways to have outside investment. So I think it's something that needs to be looked at really carefully. I think it also depends on, the kind of business that you have. So if you think about entrepreneurs as being in kind of on a scale, and there's lifestyle entrepreneurs, like the first company I went to visit in Bend when I started Cascade Angels, there was one guy there, and I'm like, where is everybody? And he said, well, the water's in, the guys are out kayaking. So sort of the business was there to support the lifestyle of the people. And then there's small business entrepreneurs, so people that have more Main Street type businesses or things where they're going to be involved in the community. They're going to and try and make a great life for their family and be civically engaged. And then there's the crazy, I want to start the next Google. And so you have to kind of find where you are on that spectrum and then say, would taking outside money really be beneficial to accelerating that growth so that I can scale the company so that I can return to investors? Because we see great companies all the time that we think are really wonderful, but they're not necessarily scalable. And so they aren't going to be companies that we invest in. So bootstrapping is a way to retain a little bit more personal control over the business, but it also can slow the growth of the business because you're funding it as you go. And I think that these are strategic decisions, again, that people make, and there's not one right answer for it.
Yeah, no, super good answer. And, back to kind of the three boxes that we talk about. I mean, a lot of that's around it's bootstrapping, right? It's like, hey, go build the thing you think you can build. Does anybody care? And do they care enough to pay? Well, if you can check all those boxes, right, and they're paying for more than it costs you to make it, you've got a business. I think the taking on outside capital, one, you have to fill part of your business. You have to think about it in that context, which is if we start a business today and we got nothing other than a couple smart people sitting around the table, we're worth something, maybe you could argue. But if we have our first customer, right, we're worth significantly more. Or if we have our first 5 customers and a distribution partner, we're worth significantly more. And then as an entrepreneur, when you go out and you say, hey, my plan says I need to grow this fast. And I think you got to think about that in terms of fundraising. Is not just that money's available and let me go try to get it because I'm doing a startup. It's like, look at your plan. And if your plan says, I need to hire 5 more people to accelerate the growth of this business over the next 12 months, where am I going to get that money from? Am I going to take it out of my own pocket, or am I going to generate it from the business, right? Get my customers to prepay, do some other things to try to bring cash in, or do I need to go seek outside capital, right? The plan drives the capital requirements. So, a lot of times, unfortunately, what can happen is like people start businesses and then everybody around them is like, go raise money. That is a tool in this, right? And then even as you get into raising money, there are different profiles of investors, right? There are individual angel investors, which are people that can write a check from $25,000 to $50,000, that their return mindset is, maybe I'm doing this just because I've had success and I want to pay it back. Maybe they're just trying to, beat the S&P 500. Maybe they want to double the money, whatever it is. So the return threshold is not as high. Then you get to like seed funds, which is what we are. And so we've got a return threshold as well, which is a little higher than that, right? But we're not a $100 million venture capital fund, right? We're not Sequoia, where we only can invest in things that are going to become the next Uber, right? If you find yourself trying to finance yourself with a Sequoia when that's not what you're trying to do as a business or the opportunity you're facing, you're going to get frustrated. And when I was out raising money as an entrepreneur, I didn't understand that segmentation, that there are different types of money, right? And that just because somebody has a fund means they're going to look at it the same way. If it's a big fund and you come and pitch them, they're going to want you to be an IPO candidate. And that's, you can certainly aspire to that, but that's taking that on, and the expectation of the capital is also a super important piece of this as well, versus some of the other things. So yeah, look, I think that going and building something or having something that you can sit down across the table from somebody, let's say we get to do that again, and visualize them taking $1 out of their pocket and handing it to you, right? Like, that's what you shoot for, right? And if you get that and you get that with some repetition, then it's about, well, what do I do with this, right? Is it just me and I can make good money and I got good margin and everybody does well? Or man, I really think I can grow this thing a little bit more. So I'm going to go, and my plan says to grow it, I'm going to need outside capital, and then begin to think about the capital that you're attracting.
And there are lots of kind of helpers in this regard. This thing that Mr. Rogers' mom said to him, when you get in a tight squeeze, like look for helpers. And there are lots of people out there that want to take certain parts of, take an ownership in the company or do all kinds of different things. And I think one of the things that we say to our, entrepreneurs that we talk extensively with is, if you're going to take money from an outside source, make sure that you vet that person or that fund as much as they're vetting you. So do as much diligence on them as they're doing on you, because again, if you do take an investment, it's a long-time prospect. And honestly, having had some experience with this, it's harder to get out of than a marriage. It's just more complicated because it's around financial destiny and legal requirements, and so it's just important, to be conscious of that. What else do we have, Robert, on the question?
Yeah, I thought this was a good one. This could be a topic in and of itself. Is this, thoughts on team building issues like hiring friends, family, and startup, husband and wife teams, etc. So, yeah, I think that as a founder, rarely is anybody else going to care about the business as much as you do. Right? Maybe two founders, maybe you're in together, whatever it is, right? But finding, you get it in motion, you're working on something, and all of a sudden someone's like, oh, that's awesome, let's do it together. Startups are a continuum, right? And this is part of being a leader and being a CEO and being a head of a company. Those who you start with aren't always going to be the ones you end up with. And that could be based on their choice, that could be based on your choice, that could be a life change on their end. Different priorities, different things kind of come into it. So you start off and it's great aspirations. Hey, this is great. Let's all work on this together. The expectation is we're going to, you build a spreadsheet. It's all about variables. Hey, we're going to be revenue, in a month, and we're going to be cash flow positive. We're going to pay each other great money in 90 days. Well, what happens if that becomes 180, right? And then if that friend who gets intolerant about that, right, or can't handle that because of the expectation that it was going to happen sooner. So I think that, like all things in life, shared expectations are important to have successful both personal and professional relationships. And so I think out of the gate is not just because we're friends, let's do this together, but approach it as structurally, which is, hey, this is a business, great, everyone's going to deal in. We see this all the time where, and then you got to try to fix it, which is three founders come together, everybody splits the pie. There's no vesting on the shares. And then 12 months later, two of those founders are gone, and 40 to 60% of the company is held by people no longer actively involved in the company. Lots of layers of implication in that. One is that sucks because you're going to do all the work and they're still, going to participate in it, even though they didn't. There's work that was done and needs to be justly rewarded, right? But I don't know that they need to walk with 60% of the company. Larger institutional investors, and we're not a large institutional investor, but we are. And so when we see that, we're like, okay, if you're going to have to hire a core team, how much stock and ownership is actually left to deploy that, right? To go make a key hire or reward your employees when you've kind of walked out the gate. So simple things like that, which can be very complex in the future, start with everybody feeling good about working together. And it's not awkward, right? It's just a matter of, hey, this is the way we start a business. This is how we paper it. We're going to be a C Corp. If you want to take money from an institutional venture capitalist, you need to be a C Corp. You can raise money as an LLC. It's a less expensive way. You can do it on a convertible note or whatever it is, but you will eventually have to move to a C Corp. So don't have to. If you have no desire to raise money, don't do that. But that's part of it as well. And so there's a little bit of complexity in setting that up. It's not hard. It's not rocket science. It's just a few more pieces of paper. So go find a competent attorney. There's tons of them in Portland. We're happy to make some referrals that'll set that up. But part of that, they'll also help you understand how a founding team should be structured and properly papered, right, is I guess my exit point on that. Okay, how are we doing?
I think that was a really thorough answer. Go ahead.
I was going to say, what we thought was we do this for 30 minutes because we didn't know if anybody, A, would show up. So thank you for showing up. And B, if we would have any questions. So this has been super good. So if we go to the top of the hour here, we got about 8 minutes left. So we can just keep grabbing questions, or if there's something more pressing, everybody vote them up and we'll try to get to that. And then the other is, I'm assuming, given that we've actually held our audience pretty good here and gotten some questions, that everyone's interested in us doing one of these again next week on Wednesday. So if you come back, that'd be awesome. Tell your friends, tell your colleagues as well. That'd be cool.
Yeah. So one person asked if there were ways for us to collaborate that we meet lots of great people, and are there ways that we could connect and collaborate? So I think, for us, this is a forum to do that with you. We'll do that every Wednesday for a few weeks here. And if there's still momentum, we'll probably continue. There are a lot of community-based resources that are working with early stage entrepreneurs. And if you would like some direction to those folks, I'm happy to provide that as well. And it looks like we're getting a few yeses in terms of, yeah, let's go ahead and do another one next week. So we'll plan to do that. Do you want to make any closing comments, Robert?
No, I want to thank everybody. You obviously have a lot of other things to do other than listen to us. And our again, the goal is to try in this weird time to be helpful and be open and try to provide some guidance. We do this on a lot of one-offs. Again, as some of you have talked to me before, you like, oh, he always says that. Repetition, right? I think is super important. Yeah, no, that's sort of, this was fun. This worked. I think everybody's audio and visual seemed to work out okay. We didn't get any complaints on that. And Julian, of course, I always enjoy chatting with you.
Yeah, you as well. Robert and I can talk about this stuff, for hours. So we appreciate the questions. Questions were great, and we want to be helpful in this time. I think it's like Robert, you said this earlier. Being an entrepreneur is hard, and it's much harder than anybody ever expects. I think if we knew when we started it how hard it would be, that we might not do it, but then you do it once or twice, and it's like, oh, this is really very cool. It's a creative endeavor. It's a way to, kind of exercise. It's like being a high performance athlete, let's say, only in business. And I think that especially now, this is a really tough time. So to the extent that any of this is helpful, and again, we're not trying to provide advice, legal, financial, or business advice. We're just speaking from our own experience about what we're doing in our company. There's not, people often don't think of fund managers or funds as, people who are running funds as being entrepreneurs. But we think of ourselves that way. We built this company to put money to work in Oregon and the Pacific Northwest to generate a return and to change the economic future. So with that, I think we can close, and thank you again for spending some time with us this morning. Have a great day.
Yeah, for sure. Thanks, everyone. And we'll go through all the questions as well. And if we miss something, we'll make that part of the kickoff next week as well. But yeah, thank you, everyone. Very cool to, I guess, kind of interact with you. Appreciate everybody making the time. Have a great day.